Welcome. I am Eric with Mother.com, and I greet you, beloveds, in the love and in the light of the one prime creator. So today I'm going to do a follow-up to a video I did regards the Nifty. This video is all the way back from about 2 weeks ago, from about January 5th. So I'm going to do a follow-up. So if you haven't seen this previous video, for this video to make sense, I would say take a look at this previous video in case I forget to link it in the description of this very video. So watching this video would make more sense before watching the current video. So in the prior video, this is where we were, right here on the RSI. Now I've already pre-drawn the line, so I'm just going to highlight the lines that we were discussing about 2 weeks ago, and it is this line right here, a backtest line, and we were trading right there. The suggestion was that could be an area of potential resistance right here, and we can extend the line and see what happened after the fact. And if we extend the line, you can see we did go above the line and back below it in what, in my opinion, is uniform activity, which means that even the move higher was a well-designed trap. In other words, it looks something like this. We tag the line, we go below it, we went above it in something like that. So I'm saying that this also is a form of uniform action above the line, back below it. And if you're sensitive to that concept of uniform activity, then the move back below the blue line in itself was a sign that there was a swing trade to be had on the way down. Now in the prior video I was talking about the monthly chart. So quick look at the monthly, we can see the monthly chart is still above RSI 69.1. So you are actually seeing short-term pullbacks from a couple of days ago, but the monthly, as long as it is above 69.1, is still very strong. For the Nifty to see a big price drop, the RSI is going to have to move below 69.1. Otherwise, for now, we can see that bulls are still in control. Now, remember, the Nifty has been above 69.1 since about February, during this breakout that took place in February of 2021. So the RSI has been very bullish and continues to be bullish as long as it is above this threshold. But maybe you're new to this number and you're asking, well, where does this number come from? Excuse me. Okay, let me explain. So it comes from the golden ratio, golden mean, phi. It has many names. A Fibonacci sequence constant. Many names, but this is essentially the number here. So what we're going to do is we can take 61.8, divide this by 2. The reason why we divide it by 2 is because there are two key levels. One level is above RSI 50, and the other level is below 50. So you got two levels, above and below. So 61.8 divided by 2, what do you get? You get 30.9. 30.9 is this level that is traditionally given the level of 30, but it's 30.9. We take 100 minus 30.9. We get the top level, which is what is traditionally given, 70. The number is actually equals 69.1. All right, let's move on. So quickly back to that daily chart. Couple of observations is we've seen that in a sense we can assume that this was uniform action, twice rejected with uniform action. That's the assumption, and I'm going to try my best to show that it is true. It's one way to look at the market here. All right, that's one way. The other way is based on the uniformity principle. So there's this break here of the highs. We can draw it as such. And again, we can say the line, this is the break point here, and we went and tagged it here, went down, above it, looks something like that. So this is double uniform activity rejection. In other words, this movement here is generally a sell signal. And I'm going to have links that explain this uniformity concept in the description of this video. All right, now let's take a look at the MACDs. As you might be aware, I use two MACD settings. And we can see here that if I take the lows from here, connecting these lows, I get a line that confirms the recent daily resistance is being rejected on the MACD with the uniform activity. So let me show that with price. All right, so here we have it with price now in our viewpoint. So we got this line here corresponding with the uniform activity rejection, confirming what the RSI was saying. The RSI was showing it from a different vantage point. We can also draw a line right there. This line happens to give us the resistances and pullback areas here, and again there. Should be pointed out, at the highs we have divergence of the MACD. So that's one MACD setting of 13, 21, 8. Again, I'm still in a sense using 1.618 with my MACD settings, because this is part of the earlier numbers for the Fibonacci MACD, Fibonacci series sequence. So the other level or MACD that I use, and by the way, I should state here, you can use whatever MACD you are comfortable with. These are just the ones I use, 5, 8, 3. Again, part of the Fibonacci series number. So in a sense, I'm still using 1.618. The reason is I'm trying to get as much of the natural ebb and flow as possible. So connecting the lows here, I'm going to extend the line that is already pre-drawn as such. And you can see that on this daily chart, again, we get confirmation that the RSI was telling us the truth. If you understand how to read the uniformity concept, a concept by yours truly, so I understand it. It makes sense to me. I'm doing my best to explain it to you. So you can see the MACDs also can give you a lot of insight. Now remember, whenever you have a crossover of the MACD above 0, it's not as reliable. I discussed this in my MACD series. Links are going to be in the description. Again, free, so relax. Now I'm going to extend this line again because I want to show you something pretty cool. You see this line here that was well established off the lows, connecting the lows here and there. This line turns into a break. This is the back MACD line, break, shallow pullback. But notice at the highs, and this is where uniformity comes in play. Uniform action above the line, back below it. Uniform action above the line, back below it, right there. In other words, the market went above the line, back below it, which is this area here. Whenever you see uniform action rejection, it tends to be a trap, and that trap happens to be the current all-time high for the Nifty. And so it is. I am Eric with Mother.com, and I leave you as I found you, in the love and in the light of the one infinite Creator. Go forth, therefore, rejoicing in the power and in the peace of the one Creator. Adonai, my friends. Adonai.